So there's been a big update in the Vanguard class action lawsuit involving its target date retirement funds. It's a class action lawsuit that was filed in Pennsylvania. Vanguard and the other defendants moved to dismiss the lawsuit, and the judge has just recently issued his opinion. I'm going to cover it in today's video. Let's begin by talking about what the class action lawsuit is all about. So Vanguard has, of course, target date retirement funds. These are funds that, they have the year in the name of the fund, so you can invest in, say, the 2050 fund if that's when you're going to retire. And it invests in stocks and bonds for you, and it gets more conservative as we get closer and closer to your retirement year, 2050 or whatever it might be. And Vanguard had two different classes of these funds. They had, I'll call it the retail class fund for folks like you and me. And then for very large 401k plans, institutional investors, they had a different fund. And that institutional fund had a lower expense ratio. But to qualify for it, you had to have at least $100 million in that fund. And I'm guessing you didn't. I certainly didn't. So for regular folk like you and me, we had the retail class fund that had a slightly higher expense ratio. And that fund at the time was for anyone investing up to $100 million. So that would include sort of mid-sized 401k plans as well. Well, what Vanguard decided to do was to take its institutional fund that had a minimum $100 million to get into that fund, and they lowered that minimum significantly. Still not low enough for you and me, frankly, but low enough for a lot of mid-sized 401k plans. So what did they do? They said, okay, that's great. We like that lower expense ratio. We're going to sell our shares that are in this retail fund and move them over into this institutional fund that we now qualify for to take advantage of the low expense ratio. Well, when that stampede out of the retail fund occurred, what happened? Vanguard had to sell a lot of assets in that fund to redeem their shares and move them over to the institutional fund. And you're saying, well, Rob, I kind of get that, but who cares? Well, in order to do that, it triggered a lot of capital gains taxes. And guess who got stuck with them? You and me. Well, I didn't. I didn't own those funds in a taxable account. But for those that did, they got hit with a huge tax bill. Let me show it to you. What we're looking at is from Morningstar. This is just one of Vanguard's target date retirement funds, the one for folks retiring in or near 2050. And what this chart shows us are the taxable income, short-term capital gains, and long-term capital gains by year. And here's 2018. All right, just showing income, very little in the way of capital gains. And there's 2019. Everything looks pretty good. They own bond funds, so you're going to expect some income, plus there's dividends. 2020, and then boom, 2021. Remember, Vanguard made this change in December of 2020. A lot of the institutional investors that could take advantage of it did so in 2021. And unfortunately, retail investors that owned these funds in a taxable account got left holding the bag, the tax bag. In 2021, you can see the huge capital gains, some short-term, but mainly long-term capital gains. And that triggered the class action lawsuit that said, hey, wait a minute, this isn't right. Vanguard shouldn't have done this. They had a fiduciary duty, to the investors that trusted Vanguard, and they breached that duty, and they should pay for it. Well, what Vanguard and the other defendants, because these are somewhat complicated legal structures. So you've got Vanguard, you have an entity called Chester, you have officers and directors all being sued. And what they said was, we're not going to even answer the complaint right now. We're going to file what's called a motion to dismiss, and I've filed many of them when I was practicing law and responded to many of them. It's a very common type of motion for defendants to file. And it basically says this. Here's what a motion to dismiss says. It says, Judge, you can assume that everything in the plaintiff's complaint, every allegation they made, you can assume it's true. We're not even going to argue with them. We're just, for purposes of this motion, we're going to say all their allegations are true. And you should still dismiss the lawsuit because it doesn't have any legal basis. So as a matter of law, you should dismiss the lawsuit. That was their argument. And they had two specific claims. The first was that the plaintiffs don't have standing, which is just a legal term to it basically means the plaintiffs haven't been harmed. I know you're thinking, wait a minute, they just got walloped with all of these unexpected capital gains tax, and they haven't been harmed? Really? Really, Vanguard? Well, that was Vanguard's argument, and I'll explain it in just a minute. And then the second thing was basically, we haven't breached our duty of care. We sort of considered everything, and we made a good decision, even if you assume the facts as alleged by the plaintiffs. And so, there's been no breach of duty of care, duty of loyalty, nothing there. Those were their two arguments. And long story short, the judge, while he agreed with some of their arguments, and in fact dismissed Vanguard itself from the lawsuit, probably not as significant as that may sound, we'll talk about it, for the most part let the lawsuit go forward. So it's now heading to discovery. So let me show you what happened. Here's the decision. I'm going to show you different pieces of it, and I'll link to the decision below this video. This actually I found fascinating. And it's not it's going to be relevant to the case. I don't know that it was particularly relevant necessarily to the motion to dismiss, but the judge felt compelled to include it in the opinion. And he says just 9 months after changing the institutional fund's investment minimum, that was what happened in December 2020 that triggered the stampede out of the retail fund into the institutional fund, Vanguard scrapped the change by merging them. They merged these two funds 9 months after creating this mess, which raises a big question. Boy, Vanguard, why didn't you just do that to begin with and perhaps avoid all of these the capital gains tax hits? And that'll come out in discovery, no doubt. But the merger would be accomplished through a tax-free exchange of retail fund shares. But here's what I found interesting. Vanguard's reversal, meaning they merged the funds 9 months later, followed actions by Fidelity, one of its biggest competitors, who in January 2021, after seeing this what Vanguard had done, they lowered its own institutional fund minimum investment amount by lowering the threshold for its institutional share class within the same fund. So in other words, unlike Vanguard, the structuring of Fidelity's decision avoided imposing tax liabilities on some of its investors. I think that's pretty significant because effectively what the judge is saying is, at least based on these allegations, Vanguard, if you'd have been smart about this, you could have done this just like Fidelity did, and apparently just like you did 9 months later. You could have done this without causing all this pain and suffering for your investors who owned these target date retirement funds in a taxable account. I think that's pretty significant. I'll tell you, as an attorney, I was always thinking about how easy is my story to tell, or my client's story, versus the other side's. And at least from this, I think the plaintiff's story to tell is very, very easy. Now, that doesn't mean they're going to win. So let's first go to the standing issue. And let's see here. We're going to jump to it. What I want to show you first, I found this interesting. The judge says Vanguard creatively posits that it might have done the aggrieved investors a favor by accelerating their tax liabilities. And since there's no way to really know for sure, the investors' alleged harms are speculative, and therefore they don't have standing. So you say, well, wait a minute. How in the world did Vanguard do them a favor? Well, you could think about this. You could say, well, wait a minute. Capital gains taxes that could go up in the future. We don't know. We don't know when these investors would have ended up selling their shares. So maybe they sell them 10 years later, but maybe they'll pay a higher capital gains tax rate then. Who knows? So maybe Vanguard did them a big, big favor by forcing them to pay all these capital gains taxes in 2021. I'm not sure from a PR perspective that was perhaps the right way to go with structuring that argument, but I do get their point. And I think in discovery, if there's ever a trial, the odds of a trial are probably slim to none, but you never know. It happens from time to time. I could certainly see the argument that says measuring damages is so difficult it just can't be done. And you can actually, as a plaintiff, lose a case if you can't prove your damages. Although I will tell you, courts are very reluctant to let the defendant get away with something based on that argument. Having said that, that's going to come all out in discovery and I suppose a trial if that happens. But what the judge ultimately did was rejected Vanguard's standing argument. He says right here, he says, look, the ample allegations outline the structure, investment strategy, and logic behind investing in Vanguard's target date funds. The allegations make it plausible that investors, most of whom do not plan to sell any share in the fund until their target retirement date, I think that's true, would have paid less in capital gains taxes when liquidating their shares of the target date retirement fund. And so the judge rejected the argument. And I think that makes sense, because if you think about a target date retirement fund, you're generally not going to sell any shares until you retire. And then you're not going to sell them all at once. You're going to sell 2 or 3 or maybe 4% a year. You're not going to sell 10% in 1 year, I think, most of the time. And so I think the judge was absolutely right to reject the standing argument. Again, that doesn't mean that damages won't be a big issue. I think they will be. And I think, could you use maybe you could create an economic model that shows how historically investors in Vanguard target date retirement funds have liquidated their shares over time and kind of come up with some kind of framework for damages. Maybe. I think it's tough. The interesting question will be whether the defendants want to actually take this to trial. I think probably not, but I guess time will tell. But for now, standing argument, the judge ruled on behalf of the plaintiffs, so that part of the motion to dismiss was denied. So let's get to the next one, which is kind of the interesting thing, breach of duty. And let me see here. This was fascinating. So let me move up just a little bit first. So this is duty of care, right? And fiduciary duty of care. And what the judge does, and this is very common in a motion to dismiss, is covers a lot of sort of the precedent, the cases in the Third Circuit where this is taking place that are relevant to this claim. But this is where I think the interesting part begins. He says here, investors plausibly allege that independent trustees and Vanguard's officers, so that's different than Vanguard, their independent trustees and officers adopted a, quote, "we don't care about the risks," end quote, attitude when lowering the institutional fund's minimum investment amount and failed to meaningfully consider alternative ways to enact the change. And that gets back to what I showed you at the beginning with the whole business about they merged the funds 9 months later. They could have done it in December of 2020. Fidelity did it. No tax implications for their smaller retail investors. So it dovetails into this whole duty of care. And the court, I think rightly rejected this part of the motion to dismiss. And he said here, the well-pleaded facts show some awareness of and a somewhat careless attitude towards the repercussions of the change for investors. We can reasonably infer the independent trustees and Vanguard officers' interest in competitive advantages caused them to overlook the effects of their decision. This is where I also go back to this idea that from the telling of a story perspective, the plaintiffs have a much easier case than the defendants do. Now, I mentioned that Vanguard itself was dismissed from the case. It's because the court said, look, Vanguard, that entity, didn't actually owe a duty of care to the plaintiffs. It was the trustees and the officers and directors. I think as a practical matter, we'll see, and I easily could be missing something here. I don't think that matters much from the plaintiff's perspective. The court did some other things, actually dismissed a duty of loyalty, dismissed some other claims as duplicative. There are also some state law claims, and I think the one based on California law was dismissed, but others, Massachusetts and Illinois, for example, were not. So again, I'll leave a link to this motion to dismiss below the video. But at the end of the day, when it's all said, definitely a victory for the plaintiffs. The standing argument was rejected. A fiduciary duty of care claim against the trustees and the officers was upheld. Now again, this isn't the judge saying that the defendants are liable and that they breached a fiduciary duty of care. What the judge is saying is, based on the facts as alleged, they breached a fiduciary duty of care, or at least enough to get to discovery, where they exchange documents, they take depositions, and so it's going to move forward. Now, there's still the question of class certification, and so that has to be decided, although my instinct tells me that's not going to be an issue for the plaintiff. Well, it's always an issue. It's always a fight. But I just my instinct, and I've handled a number of class actions, although I wouldn't by any means say I'm an expert on them. And I've always handled them from the defense perspective. But this strikes me as the kind of class that would get certified. I really suspect Vanguard wants to be done with this. So I wouldn't be terribly surprised if there's a settlement. But again, a lot of factors go into that from a defense perspective, and so who knows. So the case is moving forward. As there are significant updates, I'll let you know and do videos on updates as they occur. And as I said, I'll leave a link to the decision below the video. So there you go. If you have any questions, leave them in the comments below. I will help you out as best I can. And until next time, remember, the best thing money can buy is apparently not a Vanguard target date retirement fund in a taxable account. That's definitely not the best thing money can buy, but financial freedom is.